Hey guys, it's Matt here. Welcome back to my channel. Realty has some earnings this week, and boy were they amazing. They are absolutely scrumptious. There's just one thing we gotta talk about though. Before we get into that, let's hit the portfolio as always. Get started. This week started out pretty spicy, a couple down days, but as of right now, we seem to be doing well. Let's go over the positions. Bank of America, we are down 9.2%. Before I forget, earlier this week, I think Sunday or so, I deposited $1,000 into my Fidelity portfolio. Every month, I deposit $1,000, and then from that amount, I deploy $200 each week into a dividend-paying stock. I try to pick the stock that is lowest on the 52-week scale. This week, it was Bank of America again. Bank of America, down 9.2%. Cloudera, we are up 29.6%. Almost 30% on that stock. I made a video on that last week, and stock is doing better and better. Cisco, we are down 6.63%. Facebook, we are up 16.13%. Realty, we are up 9.5%. Really good stock. We're going to be talking about them later, obviously. Pfizer, we are up 13.78%. Qualcomm, we are down 0.45%, doing, a little bit better and better. Revolve, we are down 24.18%. They're the reason why my portfolio isn't as high as it could be, but I have faith in the company. I'm not going to sell the stock just to look good. Sony, we are down 9%. And Uber, we are up 13.31%. Now, as I'm recording this, I think actually right now, Uber is having their earnings call. I haven't had a chance to look into it yet, but from an initial go over, it's going to be a spicy one. They missed some stuff, they made some stuff. Let's just say that the stock that's showing right now may not be the stock that's showing after hours. But anyways, as a total, we are up 1%, and the total equity for my portfolio is $11,745.97. Now, let's go on to the main topic, which is you smashing that like button and subscribing. I'm just kidding. Let's talk about Realty, shall we? Alright guys, earlier this week, Realty Income posted their earnings. This is a news article from Seeking Alpha. The hotspots is that they beat on FFO per share, well, adjusted FFO per share, and they beat on revenue. You can see up here, I did check on the Uber stock. It's actually going up after hours, despite what I read here. So after I'm done recording this, I'm gonna listen to that earnings call. We might be doing better and better. I guess we'll have to see. Anyways, back to the topic at hand. I had to take a diversion there. I wanted to see where Uber's doing. And then, of course, they withdrew their guidance because of the pandemic that's going on. They have no idea how the virus is going to affect their earnings going forward, which is to be expected. But let's look at the important stuff, which is their earnings report. Right now, I have their 8K. Right now, I have their 8K. I read all this. We are not going to go through this during this video. However, I highly recommend you read through this entirely if you're interested in getting the full outcome for the Realty Income. The meat of the matter, all this information in the press release and the 8K is contained in the supplement information, which is what we're going to go over here. This contains all the information that I need to tell you guys what I want to tell you. I'm not going to go over every single page here. I'm just going to hit the highlights and then talk about the issue that I want to talk about. Let's start with revenue. Realty Income absolutely crushed revenue compared to the same quarter last year. So we have a gain of $414 million compared to $354 million last quarter. The important number here is the bottom line. Of course, their net income is $147 million this quarter compared to the same quarter last year, which they only did $111 million. Pretty good numbers, right? One thing I do want to note is that this quarter ended March the 31st. That's going to be important later. Funds from operations and adjusted funds from operations. This is a record of their cash flow. REITs like Realty use this data to benchmark their performance. Their fund from operations, which is all the stuff that is typical year by year, their bottom line FFO per share is 82 cents. Their adjusted funds from operation, this includes all of the one-off gains and expenses to the cash flow for this quarter. Their AFFO per common share here is 88 cents compared to 82 cents last year. Pretty good numbers, pretty good numbers. Now let's take a look at their assets versus liabilities. Once again, absolutely crushing it. Now this is compared to the end of last year. We can see the assets gain from 18 billion. 0.5 to 18 billion 0.7. Assets going up is fantastic to me since, you know, I own shares in a company. Liabilities have gone down. REITs are typically known to have lots and lots of debt. That's not a bad thing with them. The important thing to note is if they have the equity to handle that debt. Unlike other businesses, instead of looking at cash and cash equivalents versus their debt, you want to be looking at their equity and their common stock versus debt. How REITs generally pay off the debt other than their net income is that they sell their equity. So they sell their stock to customers and they use the proceeds from that to pay off the debt that they need to pay off. There are more pages here, stuff I'm not going to go over. Another thing I'm going to go over real quick is their debt covenants. These are sort of guidelines for their debt, sort of an agreement between them and their creditors. In order to stay on, let's just say to stay on the creditor's good graces, they have to keep their debt below a certain amount. They're absolutely crushing that as well. REITs pretty much, Realty is pretty much crushing this in every department. I am pretty happy with this earnings report. I also listened to their earnings call. Sumit, I hope I'm pronouncing his name correctly, sounded very, very confident, especially what I'm about to talk about next. I think we know what I'm about to talk about next. What I want to talk about is this. This is the meat of the matter. The end of this quarter, the quarter that they are reporting for, is March the 31st. Most of the major economic impact as far as the businesses closing and all that stuff, that started to hit in mid-March, late February, early March, and went into full effect by the end of March. This quarter, Realty is not going to bear the brunt of that this quarter. Most of the quarter was met with a lot of stores actually open. Take a look at their top tenants. LA Fitness, AMC Theaters, Regal Cinemas, Lifetime Fitness. A number of their top tenants are quarantined now. They've been in quarantine since late March. Now, that's not going to have a huge impact on this quarter's statement, but what about the next quarter? These tenants are not generating revenue. Now, these are big name players, so I don't think they're going to default. I don't think that at all. They may do debt referrals, but I don't think they're going to default. It is something worth noting as we go into the next quarter. Their top 10 industries, ordered by the percentage of the revenue generated. Convenience stores are fine. They're essential. They're likely going to stay open during this entire pandemic. Drugstores, I don't know. I don't know. Grocery stores, they're going to stay open. Health and fitness, theaters, they're quarantined. They're closed. Restaurants, quick service, a lot of restaurants are turning to carry out. Those restaurants are probably going to keep paying their rent. Restaurants, casual dining, nuh-uh. No one's dining casually right now. That's closed. If we add all that up, that is 13.5, 16% of their top 10 industries. That's going to have an impact. If not this quarter, then definitely next quarter. They do talk about this later on in the PDF, which is why I chose this PDF and not the 8K to talk about it. You can see it more clearly in this video. Go through here, don't care about that for now. Occupancy, they got nearly full occupancy. And one thing while I find what I'm looking for, a lot of REITs are getting hit pretty hard a lot worse than Realty. Realty is handling this like a champ. There are a number of REITs that are cutting their dividends. They are being heavily impacted. Realty seems to be handling it well. They have not cut their dividends yet. As a matter of fact, let me find... See, they're still increasing their dividends. That is beautiful. That is beautiful. They actually made a statement outside of the quarterly report. This is as of May the 1st. This is the week that this earnings report came out. As of the end of April, they've collected almost 83% of their contractual rent. That's pretty good. Possibly better than I expected. They collected 99.9% of rent due to their investment grade tenants. And these are any tenants that have a rating of this or higher. So all of their best tenants are paying rent. They are in discussion with a number of these tenants as far as rent deferrals and stuff like that. They're handling it on a case-by-case basis. I listened to the earnings call, and you should too. Sumit, hopefully I'm pronouncing the name correctly, received a lot of questions on the Q&A about this kind of thing. One thing that Sumit said that gave me a lot of confidence, he was very, very confident throughout the entire presentation. This situation is an ever-moving target. Even now in May, stores are starting to open up. So the situation as far as these tenants and their liquidity to pay rent is changing. So we might slowly be in a better situation. Will there be rent deferrals? Sure. I don't think there are going to be any defaults, at least not from the major tenants. Now, from the smaller tenants, the ones that are not listed, here, like the mom and pop stuff, they may go under. They may default, but we're not going to know that. So this quarter is absolutely fine. But we got to keep an eye on the next quarter. That's my thought here. So what are my thoughts on all of this, other than all the stuff I said before? I have pretty good faith in Realty. They're handling the whole situation like a champ, even when a lot of other REITs are really feeling the impact. Do I think next quarter is going to be rough? Yes. Do I think Realty is going to cut dividends next quarter? Probably not. They've been holding out steady for the past 26 years, I think. Now, this is a once-in-a-generation situation, but I think Realty is going to pull through. I have every faith that they are. They did set aside $1.2 billion of cash on hand just to take care of any fallout that they undergo throughout the next quarter. And you can read more into that in the 8K. They explain it in greater detail. But just know that they are taking provisions to protect themselves and keep their shareholders happy. But anyways, that's enough of me rambling on and on and on. Hope you found this enjoyable for you. And I'd like to thank you for watching. Eat your vegetables and watch this video right here.